welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is a show where you get all your stock-related queries answered by the experts. And today is Friday, so we'll get you Buy Now, Sell Now Pathshala today as well. But let's have a look at what the markets are up to firstly. So Cheryl, after the start, we are just drifting lower.
Absolutely, Shrishti. Friday blues, you could say, coming in for the markets, a new term that we will coin here. But if you look at the markets, yes,
maybe just matching the color of your dress.
Yeah, exactly, matching the color of my dress. But the markets, yes, drifting lower, like the way how Shrishti mentioned as well. You have Nifty, they're just barely above the 18,000 mark right now, or rather, it's a move now below 18,100. A lot of earnings to watch out for. You had Tata Elxsi, Gland Pharma, as well as names like SBI. The reaction that we are continuing to see, it is off the day's highest point. There's SBI for you. Also, you have ITC to watch out for in the earnings reaction. But let's talk about the earnings that have already come. And KEM Hospitals also reported their numbers, a good set of numbers coming in sequentially. However, the stock is subdued in today's trading session. Let's bring on board the management of KEM Hospital. We have Dr. B. Bhaskar Rao, who is the managing director, joining us on the show. A very good morning to you, sir. Thank you so much for joining us, doctor. Firstly, this FY23, actually, we've seen a decline in your margins on a year-on-year basis. If you tell us, what's your outlook for margins going ahead now?
See, basically, what will happen in this year, as we expected in the Sunshine and as well as the Nagpur, there was some delay of the things what we have been brought in, the consultants, what we have given an offer letters. They are joining, and at the high end existing consultants to send them off. In this, we were expected to resolve in Q3, but it has been prolonged into Q4. So that's where there is a little bit of dip. Then otherwise would have done much better than what the results are. But anyhow, this will be in the next 1 or 2 quarters. We'll streamline, and then we are very, very confident that what we have been planning to achieve, Sunshine and Nagpur, we are 100% sure that we will definitely achieve in the next 1 or 2 quarters. Then the improvement will show much better than what we are seeing today.
Okay, but this time if we see your ARPOB as well as your occupancy level, that has also shown a good improvement on a YOY basis. So going ahead, do you expect any further improvement in these numbers, especially when it comes to the Q1 FY24?
See, the average occupancy is better than the Q4 because Q4 is a little bit of a seasonal variations. Most of the elective patients will not come to the organization for the treatment. In Q1 looks much better, and the occupancy also will improve before the Q4.
Is there any specialty division that KEMS is planning to add on going ahead?
Other specialties we are adding both in Sunshine and as well as in Nagpur. As you know that Sunshine was basically a dominated ortho player. Nearly 50% of the revenues to come from ortho. So now we are planning to bring new therapies in this. Once we have been there in the next Q2, where we can able to get all these people on board, and whatever is the things that we are bringing in the same specialty and the new therapies in Nagpur, we are also keep boarding on them in the next quarter, this quarter and next quarter, so that will also be online.
Okay, Mr. Bhaskar Rao, just the last question. Now that we see the hospital, every company in this particular sector, when it comes to the hospitals, they are getting into the pathology space. So any such plans of KEMS entering into the pathology space going ahead? How do you see the sector?
We are actually evaluating new geographies, one in Maharashtra, and then Bangalore, as we were also telling, and they are all coming on to that. In Thane, we are looking into legal due diligence. Very shortly, we will be able to announce after entire thing has been done. All the Bangalore projects and Nasik is going on time as we planned. So then maybe we are looking for few more opportunities are coming up, and these opportunities we are evaluating very seriously, and then whenever it comes, then we'll be able to let you know, the investors.
So much, Dr. Bhaskar Rao, for joining us on the show and taking us through your numbers. That's for KEM's Hospitals, but from one earnings to another earnings. Yet CONCOR also that reported its earnings, and we have the management joining us exclusively on ET now, where V Kalyana Rama, who is the chairman and the managing director at CONCOR, joining us this morning. A very good morning, and thank you so much for waiting by patiently. Let's talk about your earnings, sir. And this is the second straight quarter where the volumes have been impacted by the EXIM businesses. Do you see? Do you expect a single-digit growth in EXIM container volumes for H1 FY24, and this due to the global slowdown by any chance?
Yeah, exports, as of now, exports are not very encouraging. But I can't predict it for the whole year because people are expecting the things to get improved. So, but as we see, the headwinds in the Western markets are not very good. So, and facing headwinds for the exports going from India, except for the primary agro products. So we are waiting, but as of now, we started our year with a target of 10% growth. But we have to wait and see how the things will pan out in this EXIM sector. Domestic, we are getting good demand, and we are hopeful that in domestic we will be able to grow. But EXIM, we are waiting for the export-import scenario to get clear.
Okay, Mr. Rama, hi, very good morning. This is Shrishti joining in. Like you were mentioning that domestic is still holding strong, and in Q4 we have seen a good performance of the domestic business. But at the same time, if we see, then this segment has less margins as compared to the EXIM business. So on the consolidated basis, any guidance on the margins going ahead?
So before giving guidance, let me tell you what we are working on domestic. Yes, you are very absolutely right. Domestic is not having as good margins as EXIM. But in the revenue, if we see, our domestic revenue percentage is increasing year on year. So to get more margins, we are trying to add on a lot of value-added services into the domestic. We started first mile, last mile logistics. We started business support solutions. Now we started new products. So we call it material handling methodologies. New material handling methodologies we are bringing into the domestic segment. Like bulk cement we are handling in normal containers. That's a very new product and it is picking up. So with these value-added services we are trying to improve upon our margins in domestic. And also we are trying to get into the distribution logistics very soon. We are working on that. It's in a PPP model where the ROC will be very high because it is no investment from our side, asset-light model. With this, we are trying to increase the margins on domestic side so that our overall margin, what we are operating, we will be able to maintain. It is a tough task. So going forward, the margins, there may be a little strain, but overall, I expect the margins in this year to be maintained. We are working towards that. Because in EXIM, we started doing double stack direct from our depot. We got a depot called Dadri in Delhi, NCR region. That's now connected directly to DFC, Dedicated Freight Corridor. And now we are not going through hub. Earlier we used to go through the hub of Katuas. Because of this, there is a lot of interest generated. The transit times have come down. So it's a very good interest developed among the customers because it is better than road movement now. Even for light commodity cargoes, time-sensitive cargoes, everything will come on to Dadri. Even we started doing reefer double stack also. So a lot of new products we are introducing into the EXIM sector. And we come out with some schemes, 1+1 schemes, which it will take time to explain on this channel, but that's a good scheme and a lot of shipping lines showing interest in that. With all that, we will be able to maintain our volumes in EXIM. That will maintain our margins. So to go with, at this beginning of this financial year, the guidance will be that we will try to maintain our margins. There may be, yes, it's a tough task, so there may be little pressures on margins, but our aim is to maintain the margins.
hopefully, and on that positive note, given the fact that you're hoping to maintain margins, but the street is also expecting that the company is a key beneficiary of the rail containerization. If you could tell us what are the synergies and the revenue potential ahead for this?
I could not get your question. What is rail containerization? See, that's what in the business we are there for last 30 years.
Yeah, but given the fact that the government now has the push that the entire segment is getting overall, how much will that bode positive for your company? Given the fact that yes, you are expecting to maintain your margins, you are adding on to new products.
See, that's what I'm telling. See, in domestic, we are seeing good growth. Good growth. That is where the containerization will come in. Exports, whatever exports earlier going on, they are going on in containers only because the Western countries, they accept goods more in containers rather than in the break bulk and bulk mode. So there, the growth will come with the export-import scenario. How we are able to do well in our exports or how much we are importing, that decides the volumes. Whereas in domestic, the more and more goods can be containerized. So to answer your question, in the domestic side, if you ask me what is the growth potential, there is a very good growth potential. So with the new methods and the new products we are bringing into containers, there is a huge scope, like the bulk cement which I talked of, the handling of commodities in bulk in normal containers. If you ask me what is the size of the market is 400 million tons. And how much has been tapped, if you ask me, that is not even 10%. So there's a huge market there to explore, to capture. It's a virgin market. So there are certain headwinds for this. The container availability, because now we are encouraging Atmanirbhar Bharat in India and we are not importing containers. The ecosystem we are developing. The container shortage is there for domestic movement for us as of now. Like I want to add 25,000 containers, but the system is still to be developed, so we are not getting at the rate what we want to add, the containers. Even the rake production, there are some issues with the wheels and axles. We are working on that also along with railways and various other industrial units to overcome the shortage. So we are working on all these things. So there is definitely the market available, cargo is there, now we have to tap it. We are working on that.
Mr. Rama, if we look at the past, so the company stated that the approval of the new land license fees policy will also help into the implementation of PM Gati Shakti scheme. Just wanted to know what is the update on the implementation of the Gati Shakti policy. Could you just give us the suggested timelines?
I don't think I made any announcement or company made an announcement like that we will be implementing Gati Shakti scheme. We will be working with Gati Shakti scheme. Wherever the new terminals are coming up, where we have to use the Gati Shakti, we are definitely using it. And the existing terminals, there is an established business practice. So there, maybe we may not require any help of Gati Shakti into that. And going into Gati Shakti, that is a critical business analysis we will be doing. That we are already working on that. But new terminals, yes. In fact, one new terminal we recently has taken up at a place called Mandalgarh near Kota under Gati Shakti. So that we are developing under Gati Shakti. And even terminals which are not on railway land parcels, where we are directly purchasing land parcels and developing, there also we will take the advantage of Gati Shakti in developing all the support services. So there is no time frame for implementing Gati Shakti for all the terminals. Gati Shakti is a continuous process, and the main idea of PM Gati Shakti program is to help logistics improvements and to reduce logistics cost in India.
Okay, with this, we'll let you go on that. Thank you so much, Mr. Rama, for joining us today on ET Now and helping the viewers to get an outlook for the company. So that was the management of CONCOR, where they expect that going ahead, the domestic business should help their margins, as well as when it comes to the export market. The last quarter hasn't been that encouraging, but they are still hoping for a good growth in the domestic market that should help their overall margins of the company. Lots happening in this particular space is what he highlighted. Well, let's move on to another management and a new listing on the bourses today. That is Nexus Select. That is one of the leading REITs in India, and one of the REITs in India, that even the first REIT in India with a rent yielding retail assets, is a home to India's largest mall platform. Mall platform includes 17 top quality assets. So let's connect with the management of the company and try and understand the outlook. We have Asheesh Mohta, who is the Senior Managing Director at Blackstone. Hi, very good morning, Asheesh, and thank you so much for joining us today on ET Now. Firstly, you're raising 1,400 crores as the fresh issue. So what are the plans to increase the assets that you have with this money, and will you have to take some more debt to fund your asset expansion plans?
Firstly, thanks for having me, on ET. Look, we are, as you said, 17 malls across the country. And our ambition is really to grow this platform. We are very high conviction believers on the Indian consumption story. And therefore, we will look to aggressively sort of build this out. What do we think we can sort of grow this to? I do think we can double this portfolio in the next 3 to 5 years. How do we sort of fund this? I think the REIT's a great vehicle for these acquisitions. It allows investors to efficiently swap in for units. It allows us to pay for cash. And just given our balance sheet today, we are only about 17% levered. It really gives you a lot of headway to take debt. What we really want to do in terms of these acquisitions is look at the highest pockets of consumption to acquire these assets. So these would be the large metro cities, some of the large mini metros where we are seeing large pockets of consumption. And in terms of acquisition strategy, really try and see if we can acquire these at NAV and DPU accretive values. That's really been the strength. The other unique thing for us has been Nexus, a dedicated platform that we built, to manage all of these assets. It really sets us apart from, single standalone mall owners in terms of our ability to sort of leverage scale, leverage relationships, and that's really what we want to do as we build this out.
Right. A very good morning to you, Mr. Mohta. This is Sharla joining in the conversation, and congratulations for your listing on the bourses. If you talk about the pre-COVID levels, the company was growing at about 10 to 12%, whereas post-COVID, the sales growth has been actually 30%. But that could be due to pent-up demand, isn't it? Or is this growth number of 30% is likely to sustain going ahead? What sort of a guidance can you offer when it comes to this particular domain?
Yeah, no, I don't think the company will sustain 30% growth. But can it achieve what it's achieved in the past between 11 and 12%? I think that's very highly achievable, just given the lease structures that we have, where we not only have base protection on rents, but also participate in sales, as they keep increasing. So 30% obviously is a function of some pent-up demand, inflation, in prices sort of catching up. But the way we've sort of thought about this conservatively is, in our projections, only thought about the sales growth being like 8.5%. I think we can significantly overachieve, on that number, and it can easily be early double digits as we've seen in the past.
Okay, Asheesh, now let's talk about your yields, because just wanted to know that what is the yield that you generate on your assets that you hold? Since it's retail, it would be 1% or 2% higher than the office and the commercial leases?
It's about, where we're currently sort of listing is at about an 8.25% yield compared to the office REITs that are prevailing in the market today. They probably broadly trade in around the 7 zip code, today. So, a pretty healthy spread in terms of the yield that we are offering. Also, if you compare this to any other fixed income product today on a post-tax basis, very, very advantageous for most investors. The 8.25% essentially translates to like a 7.1% post-tax. If you compare that to even FDs or any corporate bonds, you essentially have tax at the marginal tax rate for most investors. So really on a post-tax basis, very, very efficient and a very good yielding product for most of our investors.
Lastly, Mr. Mohta, Nexus portfolio includes 17 malls in 14 cities. If you could tell us what are the plans for expansion? Are you planning on adding some more malls going forward?
Definitely. As we speak, we are in advanced conversations with many mall owners. The Indian mall industry, just to give you a quick couple of minutes, is pretty fragmented. Other than Phoenix, us, a couple more large owners. It's really owned, between ones and two with large developers who, for many of them, this is non-core. That's really how we've sort of built this portfolio, and that's what we want to try and focus on, is to keep acquiring assets, from some of these large developers, funds, and or just single asset owners. I think the REIT, just to add, also gives you a very efficient structure compared to a normal company to just swap in for units, which is very tax efficient for the seller. So, all in all, like I mentioned before, we really want to try and scale this up very, very quickly.
All right, then we leave it there, and all the best for the future, Mr. Mohta. Thank you so much for joining us, and all the best for your journey on the bourses as well. And that was Mr. Asheesh Mohta, who is the Senior Managing Director at Blackstone, joining us. Remember, the Nexus Select Trust has listed on the bourses today, and it listed with a 3% premium. Right now, the stock is trading higher by about 4%. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we will be back taking your queries. Then, viewers, don't go anywhere. Stay tuned. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, we are live on Facebook as well as on Twitter, or you can write to us on the WhatsApp number that's flashing on the top of your screen. Remember that every time you write a message to us, do mention your name, the stock that you're looking to invest in. If you've already invested in the stock, then do mention the buy price as well as a quantity that you're holding of a particular counter. That will help our experts help you better. And with that, let me actually get going with the queries that we have right now. And the first one that I have, or actually before I get going with the queries, let me introduce our guest for today. We have Kunal Bothra, who will be joining us very shortly. Apart from Kunal, we also have Avinash Gorakshakar joining us on the show. Very good morning to you, Avinash. Thank you so much for joining us on Buy Now, Sell Now. And with that, let me get going with the first query that I have. And the query that I have is from a viewer who's actually not mentioned his name, but Avinash, he wants to know if Adani Ports is a good buy at current price. Do you think right now is the time to look at Adani Ports?
Good morning, Cheryl. I think definitely, if the investor has at least 1 to 2 year kind of time horizon, Adani Ports can definitely be a good investment choice. And despite the volatility seen in the counter, our sense is that this is a very strong cash generating business, has a very strong infrastructure positioning kind of sector kind of outlook. And I think looking at the recent developments, which government has put out for infrastructure, at least in the coming year's budget, I think from a longer term perspective, one can definitely make a decent risk reward. I think the only caveat is that he has to hold in for at least the next 15 to 18 months to get a significant and a meaningful risk reward. So definitely worthwhile to hold for the long term and even accumulating at the current.
Okay, moving on to the next query. And Avinash, this question is from Bhardwaj, and he is holding 380 shares of Tata Power at a price of 207 rupees. He's a long-term investor and wants to know, can he add more at current market price, and what's the outlook?
Yeah, I think from a long-term perspective, if one were to make the next 2 years, Shrishti, Tata Power can be accumulated. See, I think clearly now the stock is in a consolidation range, but we saw very strong numbers in Q4. And obviously, the going forward, especially for FY24 and 25, looks strong, not only for the power generating business, but even the company has mentioned that going forward, electric vehicle infrastructure and solar are going to be two growth areas. So I think, from a longer term perspective, he could expect a significant risk reward, but I think he needs to stay invested for the next at least couple of years here.
Right. Moving on, we also have Kunal who's joining us on the show. Kunal, this one is coming in from Ramamurthy from Bahrain. And Ramamurthy has wants advice on Arihant Capital. He's saying he saw a good profit last year on this particular stock that he was holding, but this year he's seeing a loss of approximately 30%. So what should his outlook be on this particular counter? In case you don't track Arihant Capital, then he wants to know whether he should look to buy IndusInd Bank at current price.
Yeah, I don't track Indian Capital, so I'll skip giving a view over there. But I think IndusInd Bank is a good chart. The stock has come back above the 1200 levels. Over the last few weeks, we've seen very few private sector bank names, formidable ones, making a strong comeback, whether it's IndusInd Bank, Axis Bank, even the likes of ICICI Bank has done reasonably well. So I think it makes sense to have these private sector banks in your kitty. So not sure on Indian Capital, but I think from the banking names, you can look out for IndusInd Bank, and if possible, look to add even maybe an ICICI Bank or Axis Bank.
Okay, moving on to the next question. And Avinash, what's the outlook on Reliance Industries? Hamza is looking to enter or rather invest in Reliance Industries. So is this a good time to buy this counter given the fact it has been an underperformance since the start of the year? She has a long-term investment horizon.
Yeah, I think looking at the next 2 years, Shristi, Reliance definitely has got several value triggers. The very near-term trigger is the listing of the Geo Financial Services business, which I think existing Reliance shareholders will benefit. And secondly, I think Reliance has now entered into a very sweet phase, considering that both the telecom business, the retail business is now ready to unlock value. Maybe over the next 2 years, you could see a lot of news flow, about this. And I think the core refining business is also expected to do well. So I think it might be a slow mover initially, but at these levels, I think if the investor can give in at least say 12 to 18 months, definitely she can expect a decent risk reward at the current level.
Right. This one is coming in from Sandeep from Tirupur. Kunal, he wants to know if you have any intraday ideas.
So I think one of the ideas which I just gave just half an hour back or so on Chartbusters was on Tata Communication. That stock looks attractive. It's formed a bullish hammer pattern on the daily charts. It's moved up higher by I think 12 or 14 rupees from those 1225 levels on the spot. So maybe if the stock comes back towards that 1225, 1230 mark, you can look to buy it from a intraday as well as maybe a couple of days perspective.
Okay, so that's the intraday idea from Kunal. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now Sell Now on ET Now, and this is the show where we get you answers for all of your stock-related queries, and that's exactly what we're going to continue doing right now. This next query that I have is coming from Sri. He's writing to us from Cochin, and he's holding Tata Motors and Mahindra in his portfolio as a part of the long-term investment. He wants to add 2 more auto stocks purely for this time for trading purpose. So he wants a suggestion on which of those 2 names could be. He needs to buy for a target of 3 to 4 months. With the horizon, that's the horizon, 3 to 4 months is the horizon, and the expected return is 10 to 12%. Kunal?
Ashok Leyland, Hero MotoCorp could be 2 bets which you can look out for from the auto pack. These 2 stocks have been underperformers, but these stocks are making a comeback. The indicators have started to become a lot more positive. These stocks are not falling in the wave of this market cool off as well in the last 2-3 days. So I think that's also a sign that maybe these stocks have changed their behavior as well as the trend. From being a sell on rally candidates, these stocks are now getting into a buy on dips zone. So I think that's also a good sign that these stocks can stand to outperform. So other than the 2 names which you've already invested, I think these are the 2 stocks which you can look out for: Ashok Leyland and Hero MotoCorp.
Okay, Avinash, Bishaka from Kolkata is sitting at a good gains in 2 counters. Firstly, he has 20 shares of Syngene, purchased at a price of 570 rupees, and the other counter he has is 20 shares of Gujarat Gas from a price of 420 rupees. Wants to know, should he continue to ride on to the profits or book profits at this point in time, though he's a long-term investor?
Shristi, I think both the companies which the investor has chosen are very good, well-managed companies, and they have the benefit of sector tailwinds also. Syngene is a subsidiary of Biocon, and I think the kind of numbers which the company presented for FY23 have been very strong. The order book has also been very strong, and they have been one of the large contract manufacturers where I believe the next 2 years are going to be very promising. So continue to hold. As far as Gujarat Gas is concerned, I think results were much better than what the street expected. And I think now with the Kirit Parikh committee report approved by the government, the raw material sourcing is going to become more competitive, I think affordable. And that is definitely going to help almost all the CNG players. Gujarat Gas operates in a very high growth market like Gujarat. So typically, I think here also, if the investor has a time horizon of at least 12 or 15 odd months, he can continue to hold. It's an MNC company and a very well established player in the CNG and the PNG segment. So I think continue to hold on here also.
All right. This next one that I have is coming in from Rohit, long-term investment. He wants to enter two stocks. One is Marksons and Devyani International. Does it make sense to enter these counters right now, Avinash, for the long-term horizon?
Yeah, I think as far as Markson Pharma is concerned, I think the risk reward is quite solid because the stock is available at a reasonably good attractive valuation. This company operates in most of the UK as well as in the European markets, and I think the recent numbers which the company has presented have been very strong. They did a buyback some time back, so I think they have been offering decent amount of value to their shareholders. So here, I think definitely Markson Pharma can be accumulated. It's a small pharma company, but operates with a niche kind of customer base. Which was the other company you mentioned?
Was one, and the other one that I mentioned actually was, just a second, it is Devyani International.
Yeah, I think Devyani International also looks quite interesting in the QSR space. If you look at Jubilant Foodwork numbers and the numbers presented by Devyani, my sense is that Devyani is much better positioned because although Devyani is a smaller player as compared to Jubilant Foodwork, the kind of rollout of stores and the kind of management commentary which we hear looks quite interesting, and the stock looks pretty solid from an investor kind of time horizon. And most importantly, it is run by the Varun Beverage Group. So, the management credentials are well established. And I think in the next, say, 2 years, I think you could definitely expect a decent risk reward here.
Okay, moving on to the next query. And Kunal, this question is from Usha from Bangalore, and she's invested in GNFC. All these Gujarat-based companies have been in focus, but her investment is at the current market price with 100 shares. Can she hold for the next 2 months or should wait for any bounce?
So you can hold on for a couple of months. I think the last 2 days the stock has fallen very sharply from 660 levels to 590. I'm not sure whether it's on the back of results or such kind of announcement. But then the last 2 months of chart patterns for GNFC indicated that from 500 the stock moved to 660 levels. So 30% recovery and then a 10% correction for the stock price. Maybe another 5% correction could be seen in the offing for the stock over the near term. But I believe that with the last 3 months of price recovery, the stock would probably indicate that a near term trend has begun on the upside. So buy on dips, maybe hold if you've already bought the stock. I think maybe another 5% lower from current levels is where you can look to start averaging.
Okay, this one is from Anil Tehlani and he is from Mumbai. He wants guidance on investing in Asian Granito for the long term. How this counter looks for the longer term? Avinash, does it make sense for Anil to look at this one to make profits going ahead?
I think, from an investment standpoint of view, it would be better to avoid the stock as of now because, right from the last 2 years, I think the performance of this company has not been up to expectations. In fact, the company has posted very disappointing numbers. If you look at other competing players like Kajaria or Somani Ceramics, I think here the business is quite attractive. They have very good capacities, but unfortunately, all that has not got reflected in the numbers. I would suggest that if he wants to invest in the building product ceramic tile space, I think players like Somani Ceramics or Kajaria Ceramics would be better choices. Asian Agro, I think it's better to avoid, considering the fact that there's a lot of speculative activity here also. So I think not advisable, at least as of now. We would have to review the company's progress as we go ahead. But as of now, Kajaria Ceramics and Somani Ceramics looks definitely better than Asian Agro.
Okay, Avinash, once again coming to you because the question is from Padma and this query is on Yes Bank. She's holding 10,000 shares at a price of 60 rupees. What should she do now? Continue to hold on or rather make a switch to banks like Bank of Maharashtra or any other bank for the next 6 to 12 months?
I think 60 rupees in Yes Bank is a very, very high price, and I think it's unlikely that she could make some money here. Although the bank has shown some improvements on the asset quality side, on the loan book credit side. So I think I would also suggest a switch. Either, the investor switches to something like Bank of Maharashtra or looks at IDFC First. IDFC First Bank could be a lot better because, they have their capital adequacy well under control. They have a very good NIM. Asset quality has been good, and the management commentary post the Q4 numbers have been very rock solid. So I think IDFC First could be a better choice. I think probably in the next 6 to 12 months you could expect a decent upside.
All right. This next one that I have is coming in from Pushpa from Mysore, and she's a homemaker. Kunal, she has RCF about 1,000 shares at a price of 139 rupees per share. She wants to know whether she should continue to hold on to it or look to exit, and this one is for a medium term.
No, hold on to it. I think 100 plus mark seems to be a good zone where the stock tends to perform quite well. I think the last time we'd seen the stock crossing about 100 levels, it moved up to almost 140, 145, and it's now getting to a retest. In fact, some time back, I'd indicated that the stock may come back towards that 105 mark, 105, 110 zone. That is a good zone where you can look to accumulate. So would maintain that stance on RCF, and I think it's a good time where you can look to at least hold on to your existing quantity, if not add more.
Okay, Avinash, what's your outlook on Patel Engineering? This particular counter has been buzzing, and this question is from Dheeraj, and he's sitting at a 20% profit right now. Should he continue to hold on or sell this one?
Shristi, I think Patel Engineering has been one of our old investment calls. I think the numbers have been very strong for FY23. In fact, the highlight of this year was that the company has repaid debt of almost 500 odd crores. The company is sitting on an order book of almost 20 to 21,000 crores. So I think visibility is going to be extremely strong. And I think looking at the kind of focus on infrastructure where Patel Engineering works, they have a particular niche in the hydropower segment, which is a very growing market and a very strong market for the company. So I think if the investor has at least 12 to 15 months horizon, he should not be in a hurry to exit. I believe higher levels can be achieved in the next 12 to 15 months. So continue to hold.
All right, this next query is coming from Dr. Subaya, who is writing to us from Tamil Nadu. And Kunal, he's mentioned that he's a big fan of you, and he's also immensely benefited from your analysis. So he's thanking you as well as the channel and the show. He has two queries today. One is on Cummins India and one is on Infosys. He has Cummins India 70 shares purchased at 1650 rupees per share. He wants to know whether it's advisable to hold on to this one, and the next is Infosys 130 shares at a price of 1540 rupees per share. So he wants to know what should he do with these counters. If you are suggesting that he exits any of these stocks, then which stock should he invest in?
First of all, thank you very much for that. It's always glad to hear such fantastic comments from all the viewers. Thank you so much once again. Coming on the two stocks which you mentioned, Cummins as well as Infosys, I'll start off in Infosys because till maybe last week or maybe a couple of weeks back, my view was extremely negative on the large cap IT names. But what's actually happened is over the last 1 or 2 weeks, the global indices, Nasdaq, etc., has come back towards a multi-month high, an 8 to 10 month high. These indices have recuperated quite strongly from their 200 DMAs, respective 200 DMAs, and Nasdaq and the Nifty IT has a very high correlation. Positive correlation. That generally indicates that maybe the worst could probably be behind for these large cap IT names. So I think purely on that aspect, I would suggest that you can look to start accumulating the likes of Infosys, HCI Tech could be also another preferred bet which you can look out for from the IT pack. Cummins, on the other hand, again, a stock which I believe you can look to hold on. The infra, the capital good names have done reasonably well. The stock is going through a time-wise correction, maybe another couple of weeks of sideways price action, but I believe it should make a comeback again above that 1700 mark.
Okay, moving on to the next query, and this is going to be the last query that we could admit. This question is from Bala, and Avinash, he wants to know your outlook on two pharma names. Firstly is Laurus Lab as well as Gland Pharma. Gland Pharma seeing a cut of almost 20% after a weak set of numbers, but is this a good time to accumulate this one, and what's the outlook on Laurus Lab?
I think Shrishti, out of the two companies, Gland Pharma definitely looks avoidable because I think numbers have been very, very disappointing. And I think markets have seen a lot of disappointment for the last almost 2 to 3 quarters. Valuations have come down significantly. The stock definitely looks attractive from a long-term perspective. But I think if one were to take a reasonably calculated risk, then I think it's better to wait for at least another 1 or 2 quarters before one sees a proper revenue and profit visibility here. So avoidable as of now. I think probably would like to wait for a couple of quarters here. As far as Laurus Labs is concerned, I think the stock looks interesting. I think maybe in the next 1 or 2 quarters, the company should bounce back quite significantly. And the price has been very attractive. I think the price has corrected significantly. The management is well known for making deep investments in R&D and new projects, and has always believed in coming with a more R&D kind of focused effort. So Laurus Labs, I think one can definitely expect a better improvement in FY24. The risk reward could be better in Laurus. As far as Gland Pharma, I think it's better to wait for some more time before the dust settles, and maybe after a couple of quarters, one could take a fresh look.
All right, and with that, thank you so much, Avinash, for sharing your views on Gland Pharma as well as Laurus Labs, and as well as resolving all of our viewer queries and viewers. With that, we come to the end of the query segment. Thank you so much, Avinash. Kunal, you're not going anywhere because after the break, Kunal is going to don the teacher hat and come back with BNS and Pathshala. So viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and as promised, before we could slip into the break, we told you that you will have Kunal who will don the teacher's hat and come back with his BNH and Pathshala segment, and there you go. Kunal is standing by, and if all of you all are reading that as a English, let me correct you that it's a Japanese terminology, and I will let actually Kunal go ahead and explain what is he explaining to us this time around in BNS and Pathshala.
Thank you so much for that, Cheryl. It's a very, very interesting kind of a candlestick pattern in Japanese term. We call it as bullish Harami candlestick pattern. The significance of this pattern is very strong because it indicates that stocks go into major bottom formation in the case of bullish Harami, and contra is also available, that is a bearish Harami pattern. So today we'll be discussing the bullish part. So this indicates that a stock which is actually going into a bit of a downtrend. So imagine if a stock is going through a downward trend, the last leg of the downtrend is more panicky in nature, where the stock falls very sharply. All of a sudden, next day you see the stock forming or going through a bit of a gap up, and the body of this candlestick pattern is on the exact opposite side as compared to the body of the candlestick pattern color, which is on the negative side over here. So this indicates that the entire negativity has been absorbed and the stock is ready for a reversal on the upside. Post this pattern we expect the stock to get into a steady uptrend for itself. We'll see two examples over here for bullish Harami. One of the recent charts, which was one of the previous charts which was found, was HCL Tech, when the stock went into a downward trend. As you can see that the stock is going through a downtrend over here, falling on from 1080-85 levels, fell down to as much as 10%, and then when the last leg of sell-off happened, the stock formed a bullish Harami pattern. So this indicates that the trend reversal is at play. We use the previous swing low as a major stop loss for the trade, and then we go on to ride the trend on the upside, expecting the stock to get into at least a full paced recovery over the near term. The second chart which we'll see would be on Bajaj Finance. Again, a stock which actually bottomed out, I think at 5,500, 5,800 levels. Very similar kind of a chart pattern after such a kind of a sharp downtrend for the stock, but there was no indication as such. Even the bullish hammers and the dojis, all of those patterns failed. But then bullish Harami pattern over here formed for Bajaj Finance led into a major bottom formation process. As I said, that the previous swing lows becomes the support or the stop loss, and we tend to go for a contra trade over here, and the stock gets into a major reversal. So very interesting pattern for the stock, especially in terms of strong bullish reversals.
All right, so that's something new that all of us have learned, and also a new Japanese terminology. Thank you so much, Kunal, for joining us and taking our viewers through BNS and Pathshala. But with that, we come to the end of this week's edition of Buy Now, Sell Now. So it's goodbye from Srishti, myself, as well as Vinny, who chipped into the show. Along with that, also our producer Abhishek, our director Ravinder, and entire team of ET Now. Thank you for watching. We'll see you next week.